Starbucks carving out some gains on the back of its latest results. Same-store sales in China for Q3 did soar 46%. However, sales in North America and other international markets were a bit weaker than expected. Let's unpack that and get to the overall state of the consumer with David Palmer, restaurant and packaged food analyst at Evercore ISI, reiterating an outperform on Starbucks with a price target of $125. David, great to have you back. Some hand-wringing, I guess, on the China guide, but it does sound like, at least in North America, U.S., you think resilience is sort of the key here.
Yes, I think there was a lot of expectation that sales really decelerated through that quarter ending June, and that they would be cautious about this September quarter. But they're really speaking to consistent 7%-ish type same-store sales growth through that quarter, and that continuing into the September quarter. And that's really big for the narrative because they were talking about getting some productivity on the cold beverage platform, and to see that yielding some results here with stable comps is really helpful for the story.
Do they get a pass on China, or how does the market view that, do you think?
Well, to some degree they do, but there's still going to be a big argument there. To some degree, tourism and the high-end consumer is needed for Starbucks more than other concepts. But there's also going to be concern that thousands of new Luckin stores and other local competitors are nipping at the heels of Starbucks and limiting the long-term opportunity. I don't think anybody's going to win the argument on China in the near term, but the U.S. and the North America business is really taking the burden off of China in the near term. They're making a lot of money. Their margins are expanding rapidly in the U.S., and for their comps to be consistent here, that's really helpful as they get ready to set their fiscal 24 guidance in November.
David, whether it is Starbucks after the bell last night, whether it's Chipotle last week, whether it's Yum this morning, I mean, what can we glean about the state of the consumer here in the U.S., especially if you start to break it down across demographics?
Pretty solid. These chains talk about there being some evidence of trade down, but there's not a lot of evidence of weakness or slowdown within the quick service arena. Even on the casual dining front, there's been stronger for longer than we would have anticipated with easing food costs. The labor pool has gotten a little bit looser, although there's been a little bit of an upside to the labor inflation side. We're hearing a lot more of ongoing mid-single-digit inflation than we would have thought there. And so there's going to be some reasons for some price increases from players like Texas Roadhouse or Chipotle. We expect both to take price in the second half of the year. So a little bit more of a stronger for longer with a little bit of a touch up on pricing.
Okay. David, quick last question for you. Top pick. If you could buy one stock right now in your coverage universe, what would it be?
It's tough. I think Yum's setting up pretty well here. We expect some good ongoing results for QSR. Starbucks, this next quarter is massive for it. This is one where if they do what they say they're going to do for the September quarter, this is one that will pack the most punch if they just do what they say they're going to do for this September quarter. So perhaps the most upside in the second half if things go right here. But we'll be watching this September quarter in the U.S. for Starbucks.